right. Are we live? Are we back? I think we're back. Welcome back to the morning show, everybody, here on Stock Market TV. I missed you on Friday. Hope you missed us on Friday as well. But we're back on the saddle. We got a lot to discuss. I will, of course, be sharing some highlights from my weekend spent in Omaha with the one and only Warren Buffett. And also, I had dinner with Tim Cook and Bill Gates while I was there. We'll hear all about that. But we have charts. We have guests. Andrew O'Connell will be on the show today at 9 o'clock. Excited for that. Chat, I know we're running a few minutes late, but we are here. So smash the like button, please. And let's go.
Spencer Israel, how was the what is it, Comic-Con for finance nerds?
Woodstock for capitalists. But actually,
Woodstock for capitalists. I like that.
Yeah, Comic-Con. I don't hate Comic-Con for finance nerds. That's cool too.
How was it? So how was it?
It was great, man. It was great. Do you want to do that now, or you want to do it later?
Yeah, I want to know. I'm dying to know.
You want to know now?
Yes.
Do you want to talk about like the stuff that matters, like to the market, or
like? I want to know how the experience was. Spencer
okay.
Israel went to the Berkshire Hathaway meeting. Sam Rowe was there too. A few people were there.
Yep.
I don't know if you ran into any pals while you were there.
Well, I actually did see Sam Rowe twice, but I didn't say hi to him at the time. I couldn't. The first time was I got on. We got online. I think. By the way, JC's on a hotspot today, so wish him the best. But if you want to bring up slide, actually, I don't. No, not a slide. Let's just bring up this video here. This is a video that I took. It's very short. Yeah, that was it. 6-second video. I'll play it again. This video that I took at 6. That's when we got to the line. That was at 6:15 in the morning. Doors opened at 7. And that was the shorter. There was 2 lines. That was the shorter of the 2 lines at 6:15 in the morning.
And that's
people were there at I think at 4 a.m. There we got, because we got up to the front finally, and there was like tailgate chairs people had brought that they just abandoned, and like all this food that they'd eaten, and all these like 6 packs of Coke that they drank. So
why does it take so long to get in though?
Well, no, people get there before the doors open. That was the line, just to wait online. So I saw Sam Rowe when I was online. I got there way before he did. I got there like an hour before he did, maybe. But I couldn't get out of line and say hi to him. So we got there at 6:15. We didn't get in the building till about 7:30. By the way, no assigned seats at this event. So it is a free for all. It is a total free for all. When you get in, it's go time, right?
So
you gotta
in the front row if you woke up early enough.
Yeah, if I'd gotten there maybe at 4 a.m., I could have been down below, but I was not about to do that, right? So
and it's in a big arena.
Yeah, I don't know what it seats. Maybe 15,000. It's a normal sized NBA.
It's a basketball stadium.
I don't actually know what it's used for. I'll be honest.
Strazza, they don't play basketball in stadiums. It's only the Final Four. I know you're all, bougie because you actually do watch your teams play in stadiums. But for the rest of America, basketball teams play in arenas. And so my biggest question is, this has been hyped up for you and for the rest of us for, I don't know, our entire careers, right? This is supposed to be like the coolest thing. Did it meet expectations? Did it exceed expectations? Are you happy you went?
I would say it met. It didn't exceed and it didn't fall short. It met expectations. The one thing that I thought was funny was what?
In line.
Yeah, it was in line. But the irony of it was when Saturday morning, I was so caught up in winning online and getting in that I think like most people forgotten that their earnings report was out already. Yeah. So it wasn't until they piped in the CNBC feed, like to the CNBC was there. They were from the exhibitor hall, so they piped in the feed, and that was when I think myself and many other people remembered. Oh my goodness, earnings are out. We were arguably the least informed people up at that point because we didn't even know Like I found out from the TV that Berkshire trimmed its Apple position. Like I didn't even know.
So that's what I want to know.
Yeah. So it
Spencer,
wasn't like
was it like a conference? Was it like a festival? Was it like how would you classify it?
I would call it a convention. It definitely had a convention vibes because the exhibitor hall has, I don't know how many Berkshire companies, maybe 20 or 30 companies were there with their people, and they're showing off their product, and they're talking about what they do, and they're trying to drum up business, right? So it had a convention or conference type vibes. I do have some pictures from the exhibitor hall and also from the main event as well. If you want to share, we have slide.
Does he get right into earnings? That's what I want to know. Like
yes.
Everybody, you're there on Friday morning. The earnings report just hit the wire. Everybody's talking about it on the news. Like that should be the first thing they address. No.
Yeah. So
earnings call.
8:45. They played a video, which actually this was the first year that the video was also aired on CNBC. It never is, but I guess because of Charlie.
I was watching. Yeah.
So they played like a half-hour video, and then after that, boom, right into it.
Are you happy you went? Yeah, sounds like it.
Yeah, I'm very happy I went. The one thing I will say, and I took notes from what he said, but it wasn't like this is a concert hall. It wasn't like the energy in the room was high, right? At the end of the day, we are all listening to a 93-year-old man, okay? So like,
I heard
people were sleeping, okay?
It was boring.
The people next to me were like passed out like 15 minutes into the thing, okay? People were sleeping. People are struggling to stay awake at certain points. Totally,
listen, yeah.
Because he drunk. He rambles. He's a 93-year-old man.
Also, I love Warren Buffett. He's great. If he gets any raspier at this point, I could barely hear him now. I'd stand no chance to hear this man in the future. I heard some clips, but
yeah.
All right.
I'll say one more thing. If you've ever seen Lord of the Rings, Warren Buffett reminds me of Treebeard. It just takes him a very long time to get his point across.
Yeah.
Each question was met with a 5 or 10 minute response, and it's like, okay, enough.
He would make a great Fed chair. A great Fed chair.
Spencer, are you going back, or is that it?
No, I won't go back. I think once was enough. But I met a guy who'd been going for 20 years. So
I'm sure there's a lot of people there that have been going for a long time.
For sure.
Should I go? Should I go or skip it?
I don't think you need to.
Okay.
Would JC be bored or would he have fun?
No, he would like everything except for the meeting itself. He would like.
What about the parties? Any good parties?
What's this picture of a private jet about?
Yeah, well, if you want to show, that's all from the exhibitor hall. So why don't you show us some pictures? Let's start with slide 29.
How were the parties? Anybody there to party or no?
There was like the Berkshire like sponsored events, right? That we didn't really go to that, but if you want to just
is that Papa Israel there?
That's my dad.
Yeah.
So the private jet, which is on the next, there are 2 slides from now, that's just from the exhibitor hall. We got to walk into your private jet. That's their NetJets business, right? Where you can basically lease private jets. Clayton Homes. I don't know if you want to bring that one up here. I took a few pictures. Prefab homes.
Yeah.
Honestly, not a terrible deal. We toured a home that they just like deliver it. You buy a piece of land and they just deliver it to you via truck.
On a truck.
Yeah. Not a bad deal. 3 bedrooms, 2.5 bath, or 2 bath. It was like 200. I think I have the price tag on there.
Is that the same as a modular home?
I think
it's the same thing.
I think so.
Chat, let us know. I think it's the same.
All right, let's get. We could do a spaces on this all day. We'll be talking about it throughout the week because I'm definitely gonna have more questions.
Yeah, I have more to say, but let's move on.
Beautiful. Let's get into the markets.
Oh, that's my cue, isn't it?
Go for it.
All right, Spencer Israel goes to the Berkshire Hathaway meeting. I go to the Berkshires, and sounds like I won out on the deal.
I wouldn't say that. I would, again, it was in line. It met expectations. It was
bullish,
good.
bullish the Berkshires. And yes, the original Berkshire Hathaway is from the Berkshires in Western Massachusetts. Fun fact. All right, let's do a quick little rundown. Dow futures this morning up 150 points. S&P 500 futures up 20 points. That's 40 basis points. That's 51.75 for the S&P. NASDAQ 100 futures up 1/3%, around 60 points. Bond futures up again. Strong finish to the week for those 30-year bond futures. All eyes are on Treasury bonds and the dollar this week. Very interesting what's happening there. You've got gold up over 1% on the day, 23.35. Silver up almost 3% on the day, 27.5. Copper up 1.5%, 463 for copper. Crude oil up close to 1%, near $79. Dollar mixed, down against the euro, up against the yen, as the volatility index hovers just under 14. Very, very interesting action towards the end of the week, particularly in the U.S. dollar and in bonds. I'm having we had our gardening team out there this weekend, and they snipped my internet, bastards. So I am internet-less, and I'm on a hotspot, which seems to be working better than I would have thought. Right? How am I doing, Strazza?
Surprisingly well. Yeah.
Surprisingly well. These hotspots these days. Back in the day, I used to have one of those like those Verizon like little cards things. They were terrible. So this is like the modern version of that. Right?
This works better. This works a lot better.
This works way better. Can you imagine that technology has improved over the last 2 decades? If you can imagine that.
Throw up the dual pane chart. This is what JC wants to talk about this morning. This is what should be.
Just quickly, Strazza, I just wanted to mention Bitcoin down 400 points on the day, 63,600. Ethereum down a full percent, 3,100 for Ethereum. And then just quickly, finally, Solana.
Yeah.
Solana 150, 4%, back to 150. Nice little bounce there. Total crypto market cap just under 2.3 trillion.
But a good weekend, right? A good weekend for Bitcoin. Got the follow through back above those pivot highs that we really wanted to see. Give them a little back this morning, but we're back.
This is what I want to talk about. Strazza is absolutely right. This is a big one, guys, because as messy as markets have been over the last couple of months, you would have thought it, at least I certainly thought or would have believed that, if you would have shown me this 4 months ago and said, how's the market doing? I would have said, pretty bad.
Yep.
And it hasn't been bad. It hasn't been good, but it hasn't been bad, right? It's been mostly messy. So I would argue that the stock market has been resilient despite more resilient than I would have expected, despite the strength in the dollar and yields. So if that pressure, lets up and the dollar and yields start to fall, which there's no evidence that it will other than a day or two. So, we got to see it. But if these things start to roll over, you want to talk about a tailwind for equities.
So interest rates are up. If you look at the 10-year, about 70 basis points this year. The dollar, up until last week, up almost 6% from those very late December lows. Meanwhile, what you're saying is the S&P 500 is up about 8%, right? So risk assets haven't been getting hit hard by the rising dollar and rally.
And also I just want to mention a lot of the market's gains, particularly at the index level, was in the first month, right? And into February, and things started to change underneath the surface in February. So a lot of these year-to-date numbers skew just how messy markets have been over the last few months. And I have a good chart to show how humans have digested that. Actually, Strazza, I'd love to hear your thoughts here. Strazza is like an anti-sentiment guy. Strazza is like, every time we talk about sentiment, he rolls his eyes. Every time we give a presentation together, which, by the way, you and I do a hell of a job at giving presentations together. Strazza's like, you take the sentiment, JC. You take it.
No, if it was the first couple innings of a new trend, or what I thought was maybe the last couple of an old trend, I would be all over sentiment. I would have said, let me take the sentiment. in the middle of a trend, it's, there's not as much.
Well, the fact that we're in the middle of the trend is actually my point here. Spencer, can you throw up slide 2 there? I think this really tells a really interesting story. So, in the blue diamonds here are current market sentiment, and those gray triangles are where sentiment was a month ago. Yeah. Notice how in most of these cases, these blue diamonds are to the left of those right triangles, meaning that sentiment has shifted dramatically. Look at the AAII bull bear spread there in the middle, dramatically to the left of where it was a month ago. Look at investors' intelligence. Newsletter writers were the most bullish that we've seen in years, and now they're actually on the pessimistic side of the equation. Boy, that was fast. Yeah. Active investment managers, the NAAIM, now on the pessimistic side of the equation as well. So a major shift. And this next chart, go to the next one, Spencer. The next chart, I think, really tells the story the best, where we went from an environment where sentiment was a headwind, this was just a couple of months ago, to now sentiment has dramatically mean reverted to we're almost in an opportunity zone. We're almost on the complete opposite side of the equation. And that has happened very quickly. And Strazza, to your point, that has happened without the stock market collapsing. You know, it's been messy. We've seen corrections, within sectors and stocks. But really just a messy market has shifted sentiment where not only is sentiment no longer a headwind, one can argue that it is actually a potential tailwind. I don't know about all that. Like, I wouldn't go that far, but it's definitely not a headwind anymore.
So here's what's happening in my brain as I see this quick ramp up in bearish sentiment. Is it that there's just some weak hands, and this bull market is just, I don't know, early on or not well supported, right? Or does sentiment usually, shift this quickly? We barely sold off, like you said. I mean, we gave back very little in terms of this year's gains, and look at sentiment ramping up like this.
I don't know. Strazza, over the weekend, Ari Wald, who's a friend of the show, who last time he was on said, I will come back. Ari Wald is the first guest ever to go out live and say, I want a regular spot on this show. No one's ever said that.
Hirsch said it, didn't he?
Maybe. Both of them should have a regular spot. I think at this point they do, basically. But Ari Wald, one of my favorite technicians, over the weekend had an interesting note where Ari calls, has always called call them the culprits. You hear us talking about that. We learned that from Ari, most likely. I'm pretty sure we got it from Ari, or maybe Ari and I both got it from the same person, and I forget who that is. I don't know. But Ari definitely has always called them the culprits, where when you're looking for bear markets, when you're looking for, who's going to be the group to lead the market to the downside, like every cycle has like their losers, like their group that were former leaders in the prior up cycle that are now dragging the market lower. We see it every cycle. And one thing Ari was saying over the weekend is that in every instance, these culprits, even before any major correction starts, are already down 20%, right? The culprits, before things really even start to get bad for the market, you already have a 20% correction in that particular group, whether it be a sector or an industry group, right? We don't have that at all in this market, which I thought was a great point. There's no group, like if you're on the bearish side, you think the world's coming to an end, and you're one of these, angry folks and all that stuff, and that's great. You're welcome to be. There is no group of stocks that you could point to and say, aha, those are the losers that are going to drag the market lower. Like, we don't have that. It doesn't exist, at least not yet, but we don't have that. So.
Didn't it look like mega cap tech would have been prone to be that? That would have made sense. So
still is, by the way. If there's going to be any group to do that, I would argue that would be the one that's most vulnerable to be in that category. The mega cap growth, unwind from, just an overexposure in, big mega cap growth stocks.
Yeah.
But we haven't seen it, right? You haven't seen it. You see it in individual stocks, like Tesla lost 2/3 of its value. Like, that's like $1 trillion. That's a lot. Apple lost $500 billion. Nice rebound last week. Not a potential, not a top, right? Yeah. So we're not seeing downside follow through, which has been a big theme this year, Strazza. Sure, fewer stocks have been going up this year. More stocks are going sideways. But you really haven't gotten a consistent expansion in stocks going lower. And I think that speaks to that point that Ari was making over the weekend of a lack of culprits, is what he calls them.
I think it's the same sitch as last year. It's pretty thin out there still.
It's not the same sitch as last year, Strazza. No, I don't believe that for a second. Last year, Strazza, if you recall, because you were the one pounding the table about this every single freaking day, we were coming off extreme pessimism, very aggressive short selling coming into 2023, which set up a monster squeeze. Best first 6 months to a year for the NASDAQ ever, right? We were coming off of that. And by the way, that continued throughout the year. Consistent sector rotation, new leadership groups, there was no culprits to the down. We don't have that this year. We're not coming off those extreme pessimistic views. In fact, it's been quite the opposite. Sentiment was a little frothy, actually, in the first quarter, right? Sentiment in a lot of these cases was the most bullish it had been since the prior cycle's peak, which was several years back. So I'm not going to argue that this is just like last year. No, it's actually very different, I think.
From a sentiment standpoint, I would agree with you. It's different. From a market internal standpoint, it still doesn't feel like a bull market that's firing on all cylinders. And that's how I felt last year outside of
It
Q4.
Was firing all cylinders last year.
Q4
Fourth quarter last year?
Q4, it did. The other 3 quarters, it was not. It wasn't. It was
the best first half for the NASDAQ ever. And you're telling me that's not firing on all cylinders?
No, it's not.
The first half for the NASDAQ, there has never been a better year ever in the history of humans.
Let me help you.
You're telling that's not firing on all cylinders?
Half of the NASDAQ 100 is like 5 stocks, my friend. And do not remember the narrative all last year. It's just the Mag 7, right?
Well, that we knew that wasn't true because we actually count. It was never just 7 stocks, Strazza. Don't even
Russell
start.
2000.
It's Monday. We're already going to do this. It's
Russell
Monday morning.
2000, Value Line Geometric.
Who gives a shit about the Russell 2000? The Russell 2000. Let's remember what the Russell 2000 is.
It's the average stock.
Hold on. The Russell 2000 is the most irrelevant and, by definition, the worst group of companies on the planet. There is no worse group of companies and least relevant stocks in the world than the Russell 2000. So the fact that the Russell 2000 couldn't keep up with the good stocks doesn't make it a thin market. Is it like Microsoft bigger than the entire Russell 2000 or something like that? Like, who gives a shit?
Yeah. All right. Let's get to
a quarter of the Russell 2000 is banks and biotechs.
We missed Friday's show, Spencer. Why don't you hop back on here and give the people the Apple news that they've been looking for? I thought that the first thing that you would say about Berkshire is talk about what Warren Buffett said about reducing his Apple stake by 13%. That's what I'm really interested in.
I mean, I got the sense that he kind of downplayed the whole thing, right? But yeah, Berkshire did trim their Apple position by 13% last quarter. Then, of course, the immediate speculation or assumption was was why? Yeah, 1, why? 2, is there more? 3, is that why Apple went down last quarter? Right?
I don't wonder why as much because it's gotten very big as a percentage of their public assets. So I don't wonder why as much as I would wonder, are you selling more? Are you done? Is that it? Like, you know what I mean? So like,
I mean, he was really quick to be like, obviously we still love Apple. Actually, what I think it did, it answered a lot of people's questions because people have been asking him for a long time, what are you going to do with Apple? It keeps growing. And then Q4 they trimmed like 1%, right? Very small, very minor. And now they're trimming some more. And he said it's sort of just responsible portfolio management.
Hold on, Spencer, did they talk about, so Apple is their largest position, public or private, right?
Yep.
Do I have that right?
Yep.
Yeah.
How well the stock has done despite that being the largest position, right? Has anybody that's to me probably the most impressive part of Berkshire Hathaway.
How well Berkshire has done despite 40% of its public assets being in a stock that's trending lower.
Yeah.
No,
Right.
they did not talk about that. But there was a question, and I want to bring Andrew on.
Kind
in
of
a
in
minute.
bad taste at the Berkshire meeting to say that, but we can say
There was
whatever
a
we want.
question.
It's true.
There was one question from the audience that I think you guys would really appreciate.
Yeah.
It was one of the last questions, and someone asked, Warren, you have said publicly that your instructions for your wife after you pass are to put her money in the S&P and leave it alone. Well,
why not put it in Berkshire?
No. The question was, given the tech dominance of the S&P, would you maybe tell her to put it in an equal weight S&P instead? And his answer was basically, who gives a shit? That was more or less
good for
that
him.
was more or less his answer.
Yeah.
Who cares?
So his answer was like, either way, you're good.
Yeah. Either way, she has more money than she can spend. Why do I care if the equal weight S&P is going to do better than the S&P? I don't care.
No, it's a good answer. You know why? Because first of all, the Warren Buffett is the only person I know who's 93 years old and is investing for the long run, right? Which is just so funny in and of itself. But what ends up happening between the market cap weighted S&P and equally weighted S&P, and which one leads and which one's the better asset to be in, or the better ETF to be in, it's sector rotation.
It's growth or value. Yeah.
It's growth. It's really, it comes down to growth. Is tech in a leading position, right? Is growth in a leading position? If that is the case, then the market cap weighted S&P 500 is going to do better. If technology and growth is not in a leading position and it's some of the other sectors that are outperforming, then the equally weighted index is going to do better. And that's always going to be shifting, right? It depends on when you start your data. Like if you go back to the beginning, the equally weighted S&P 500 has outperformed the market cap weighted S&P 500 ETF since inception. But that's cherry picking when that was launched, right? You could choose any time horizons to fit your narrative. But I think that's a great point by Uncle Warren, how it doesn't really matter because it's probably going to even itself out over time, right? That's probably a good way to look at it, at least from his perspective. No?
Yeah, absolutely. When you're investing for that long, why worry about it, right? I guess it's going to be a super long-term position. It's going to be a very...
Why worry about this particular question is kind of my point, right?
As it turns
for different
out,
time horizons, shorter term, intermediate term, individual cycles, they'll be different. But for Warren Buffett's time horizon, forever,
The question I would ask is why not leave it in Berkshire or put it in Berkshire? They're a pretty good fund as well, right? So
maybe he doesn't trust who he's leaving it to.
Yeah, that's a little strange, right?
Maybe he trusts the good old boys over at Standard & Poor's.
So listen, Apple, second largest company in the world, reported earnings Friday. I don't know if it was the best report ever. I don't think it was. I don't know, Spencer, if you have the headline numbers or not.
Oh,
point is,
that's what you were referring to. Sorry, Steve. I thought you were talking about Berkshire and Apple. My bad.
Apple. As it turns out, the biggest, baddest company in the world is not completing a double top in the middle of a raging bull market. Shocker for some, but this is not.
And Strazza, I want to give a big shout out to Strazza. Strazza, put itself out there. Took the more aggressive trade that I was not willing to put on. All shorts obviously had been covered. We discussed that, but the trade was to put on a risk reversal. And that was sell naked puts and take that money and buy out of the money calls. That was the trade. I loved that trade. I just wasn't willing to put it on going into earnings. I just did not want to own naked puts in Apple going into earnings.
Right.
Strazza,
but you're not surprised it worked. You're not surprised that it worked at all.
Honestly, I would have been more surprised if it didn't work. I just didn't want that risk. Strazza was like, I'll take the risk. I'll put that trade on. And you even said it the day before earnings. You're like, I'm not unwinding the trade. I'm going in with naked puts. And it worked out for you. God bless. This is one of those things like in hindsight, should I have put on the trade too? Or did I do the right thing for my time horizon, my perspective? And I'll stick with that. The trade worked. I figured it would work. It worked for you. I just didn't want to take on that risk. And so I didn't. Right. And that's cool. Right. So there's no like, oh, fuck, I should have put on the trade with Strazza, bro. Right? Like, no. Like, I made the right decision for me, and I'll stand by that. And it worked for Strazza. That was the right decision for you, and it worked for you. And I think it's a good lesson for everybody that we all have different time horizons and risk parameters and objectives and other parts of our portfolio, right? Strazza, correct me if I'm wrong. Do you own any Apple in other portfolios, or was this your only Apple position?
Yes, I'm long in an account that I don't plan to sell for very, very long time. But the risk reversal is closed now. And just as like a qualifier on this discussion, this is not something I would do or suggest that anyone do on most stocks. A risk reversal into an earnings report is not something I'm out here looking to do, right, on a regular basis. With Apple, it's a little different. I felt a sense of comfort in the fact that it was already discounted 15% this quarter in pricing in a bad report. So I felt a little bit different about this one. I wouldn't be going out.
And it was Apple, and not like some small cap software stock.
Absolutely. I was very comfortable going into the report. Now, question for you next. The setup in Tesla is not all that different from this.
That's right.
Are you into that one?
I certainly am.
Okay. All right. I'm thinking about it. I got a long car ride. Maybe I'll think a lot more on it this afternoon, but I'm not there yet. Tesla's a wild child for me, but I look at that chart and I think the same thing. The same exact thing I just said about Apple. Is this really going to be a top in a bull market in Tesla? I don't know. I highly doubt that. One more that's not a top before we bring on our guest real quick, throw up the Bitcoin. Also a risk asset. Also, in my opinion, a tech stock. So Bitcoin looked sketchy. Everyone on the internet thought this was also a top. As it turns out, these patterns that so many jump to call tops or distribution patterns end up not being that most of the time during bull markets. This failed. Looks a lot more like a continuation pattern right now. Still need some confirmation. I think we get that soon. I think you get that the prior cycle highs, really. But we're back above the pivot lows. So I think from failed moves come fast moves, and maybe you take a breather here today, like it looks like Bitcoin's doing. But then I think we're ready to launch higher out of this.
What's the level that invalidates this not a top?
The pivot lows. The pivot lows. We're back above it.
What's the number? Give me the number.
I think it's 61. It's 61. I said it last week. 61 should be. Yeah. And then I think you get confirmation at the prior cycle highs. You can use that. Some would use this little third peak here, right? So the pivot high right here that we're running up towards. I think you want to use the prior cycle high. It's going to be like another couple $1,000.
Spencer, I want to add to this point that Strazza is making because
but then I want to bring on our guest.
We
for sure.
do have guests.
This is important.
Yeah, they're important too.
It's important because when you're looking at Strazza's talking about these failed breakdowns in Apple, in Tesla, in Bitcoin that are potentially squeezing higher, these not a top patterns. And we like to look around at other things, particularly those in favor this particular part of the cycle. Throw up slide 2 there quickly. This is the dog with hat, which has been
everywhere, JC, in crypto. This is everywhere.
This is, one of the poster children of this particular part of the cycle, this 2024, kind of meme coin theme, DJT Trump thing, right? Like all kind of in the same sphere. And then you look at this and it's like, this looks like a classic top. Or is it just a consolidation within an ongoing uptrend, right? And this isn't like this like little penny stock nothing. There's a $3.5 billion market capitalization, 31st largest token in the world. Right?
It's hilarious. Yeah, that's all true, which is funny.
So I'm bringing on Andrew O'Connell.
Not a top. I think it's in that same realm.
I'm with you.
So something to keep an eye on.
And there's a lot of these.
I'm bringing on Andrew O'Connell from Pristine Cap.
I like a shakeout with my failed tops.
I know we didn't get that here, but that's relative strength, isn't it?
It is. Yep.
I'm bringing on Andrew.
Bring it.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Andrew.
Hey, good morning, JC.
What's going on, my man?
Not much. Enjoying the Monday so far, looking at this pre-market action and listening to you guys chat about Bitcoin.
How about that? Dude, it looks like you're like in space right now, right? Doesn't it look like Andrew's like in a rocket ship somewhere and he's like, oh, hello, Earthlings, I
got the space suit on.
Dude, it's awesome. So talking about Bitcoin, talking about pre-market action here on this Monday morning, just right off the bat, like going into the week, where's your head at? Like, what types of things are you thinking about?
Yeah, so going into this week, we had that big corrective sequence in April, and it was like a really quick just whoosh to the downside. S&P 500 went down about 5% in a straight line. It was pretty scary action, but then we got the Federal Reserve that came out last week, and they essentially are easing monetary policy again. So they're cutting back on their QT program, which is a great thing for the markets. But I think the next two big catalysts that I'm looking for, there's a few actually. So we have Nvidia earnings coming up in about 2 weeks. We've got China earnings, and right now Alibaba is my biggest position. So I'm really looking forward to that. And then we have a CPI report coming out in about 2 weeks. So I'm just kind of looking for potentially some continuation in these Chinese names. And I want to see if we get more rotation out of some of these US mega cap stocks.
Haven't we seen that already, though, Andrew? Some rotation out of those things in this quarter. Apple getting killed, Tesla getting killed. Right? Tesla lost $1 trillion in value. Apple lost $500 billion in value. No? I mean, haven't we
Yeah,
already started to see some of that?
yeah, so that's the really interesting part. So like these stocks, they've led the market, if we're just zooming out, they've led the market for maybe like the last like 10 years, but they have really been outperformers ever since the AI revolution began about 1 year ago. Like if you look, everyone was sharing those like Magnificent Seven versus the S&P 500 charts, and the outperformance was just incredible. This earnings season, we started to see like that rotation out of the names. A lot of them are pulling back. So what I was looking for was like, hey, as these start to uh, pull back, do we see a new leader emerge from earnings? Like, does Apple say have a better than expected number? It's the new leader. Amazon, Meta, one of these names. I was looking for that new leadership, and to be honest, so far I'm not seeing it. So like, if Nvidia does not deliver the goods in a couple of weeks, I feel like we've got our US mega cap tech stocks, which are kind of just like range bound at best, even though they're bouncing pretty nicely right now.
But at the same time, Andrew, you've had this rotation, right? It's not like mega cap has been leading the way this year. So
Yeah, so we've got what's really interesting is Chinese megas are actually beating the US megas now on a year to date basis. And I'm sure if you ask like almost any asset manager, like, hey, are you guys overweight China right now versus US?
No.
Almost no one would say yes. So if that trend continues and we start getting to the back half of the year and everyone starts looking and like, wow, China's actually outperforming the US, they might have to add some exposure. So like I'm really closely looking for rotations right now.
And so there's 2 points that I want to make. First of all, my father texted me at the beginning of February on a Sunday night asking me about the Chinese stock market and what was going on. Um, my father has never texted me about any stock market ever, yet alone the Chinese one. I didn't even know he knew that China had a stock market. China's been up every day since then, pretty much. So not just the portfolio managers, which I think you're spot on, Andrew, but even anecdotally, that was, I mean, shout out. And my dad doesn't watch the show or any of this stuff, and I can't tell him what a great contrarian indicator he is because then we lose the data. But I did want to bring that up. The other thing I wanted to say is, when you talk about rotation, like out of mega cap, like it's hard to say like into China as like a group because China's like its own animal, right? Like, how do you think about that when it comes to rotation?
Yeah,
Is
that's
that
a
even
great point.
rotation?
Yeah, so what I'm seeing the chart that Spencer just shared with us. Um, so what I'm noticing is potentially this other dynamic where like we have K-Web, which is doing very well. Cannabis stocks, that's kind of the same thing. It's not comparable to US tech, but we're seeing groups like utilities that are starting to surge. Energy had a nice surge earlier in the year, and it's actually performing very well. So like I think over the last year, it's really been software, AI, mega cap tech, and almost everything else has been a really bad underperformer. So it's really just like, do we get like that incremental dollar that just goes like hey, I'm no longer going to be mega overweight, these 7 stocks. And potentially what I'm looking for as well, if interest rates start moving lower, like if we get a nice light CPI report, which I don't think is out of the question because crude oil is starting to move down now. If we get that light CPI report, we could see a rotation into small caps, which have been huge laggards on like a 1-year time frame, 3-year time frame. Right here, if we look at this chart, look at how well the QQQ has done over the last 3 years, up 32%, and the S&P 500 is up 27.83%. Small caps are down 7. So if we get rates moving lower, I think that would hurt a lot of people if we got small caps that started to do well. So that's what I'm looking for. I think in the back half of the year, at some point, we'll get a really nice run in small caps. So I'm looking out for that.
You need regional banks and biotechs to get going for that to work.
Yep. And I think in order to get those going, we need to see bonds behaving a little bit better. And I watch the TLT all the time, and the TLT on Friday closed above its 20-day simple moving average for the first time in maybe a month. So yeah, if we get a light CPI print, I don't think it's going to be like Apple, Meta, Amazon, those kinds of names that just like rip. I would imagine if we get a light CPI in 2 weeks, it could be the small caps that just absolutely rip.
Can we? I think you highlighted this so well. Can you go back to that other one where it talks about the market leaders? It's like cannabis, Chinese tech. It's like, wait, what? Like, when was the last time you could say that cannabis stocks and Chinese tech were the market leaders? When was the last time you could say that?
Yeah, and I'm noticing the mainstream financial media, I don't really see them talking about some of these other themes. Like, home builders are in like the top 5, which are very rate sensitive. Energy's been doing very well. I think that's been covered. But yeah, cannabis, nobody's covering. China, maybe now people are starting to wake up. But I just think, like, for me as a trader, I love it when there's big changes happening in the market. Because I know most people, they're not looking at the charts every day. They might not catch these changes happening under the hood. So I'm very, very keen on what's happening here. And yeah, I think there could be a good opportunity in the second half if this keeps going.
The only issue with cannabis that it just got amazing news and it couldn't even hold those gains for like one day.
Yeah, it's a great point, Spencer. How do you think about that, Andrew?
Yeah, so I've been trading the MSOS, first 4 or 5 months of the year. I actually closed out my position when we got that horrible reaction. Something about it just didn't make sense to me. I couldn't wrap my head around it. The technicals just, they tell the story. So I actually closed out of that trade for the time being. But with that said, it's such a small group. And with these smaller groups, like, they can do whatever, on a technical basis. They can really mess with a lot of traders. So yeah, I'm no longer in that trade, but I would not be shocked if that one as well just had like a blow off move into the end of the year.
Big bases, Andrew. Huge bases in the top, right?
Yeah,
How's it going, Andrew?
Hey, what's going on, Steve?
JC, you make a good point. It's strange to see K-Web up there with pot stocks, but with ARK down at the bottom, right? If I said, hey, Chinese tech is ripping, pot stocks are ripping, what do you think speculative tech is doing or speculative growth is doing? You'd say it's right up there with them.
Yes, and I think that's another group to watch, potentially.
I agree. And do you think that if small caps are moving on weak CPI, that ARK would be moving with them?
I would think so, but to be honest, like, I think what's been revealed to the world of traders and investors is just like the companies that are in ARK are just like terrible. Like it's like if someone was trying to like pick a basket of just like the worst small cap companies that they could pick. Like I did a screen for them, like which one of them actually generates cash, and like none of the companies generate cash. So yeah, maybe if there's like a speculative boom in the market, maybe those are like the last ones to run in like a very speculative boom. But I just think investors associated with low quality companies now.
Well, isn't that the point though, Andrew? Like, aren't these funds by definition looking for the worst companies in the world, right? That don't make any money because they're looking so far out into the future. and there's nobody on the planet who has incinerated more money than the portfolio managers over at ARK, right? And think about it like this. I've talked to a lot of venture capitalists and angel investors for many, many, many years. And one thing that I learned from them that I hadn't really thought about is that if you think too far ahead, you're gonna go broke by the time you get there. Like if you're thinking 10 years into the future, there's no way you're gonna last that long. That 4 to 5 years into the future is where they live, right? Like that's where the angel investors and the VCs that I talk to, that's what they taught me. So this portfolio that, correct me if I'm wrong, Strazza, I think is looking out 10 years.
Yeah.
It shouldn't be surprising just how much money these funds have lost investors over the years. More money than any fund family in world history.
Yeah, it's kind of astounding. And like I think a lot of them, they had that boom during COVID because that really like accelerated the world a couple years. So I think that worked out very well for them. But yeah, a lot of the companies, it's like, are they actually going to deliver? Are they actually innovative? And like if you look through the list of companies, it's like Roku, it's Zoom, like these companies, like they're kind of like household names. I don't know. I hate to be that guy like disparaging that
Here's what
team,
it
but
is
like
to
yeah.
me. It's moonshot investing in the public market, right? Like JC said at venture capital, right? So if you look at their fund performance last year, like Andrew's saying, a bunch of trash companies, majority of components performed terribly. Coinbase was one of the best stocks in the S&P 1500, by far their biggest position, really carried them. Otherwise, the performance would have been terrible. But that's what it is. They're looking for like these big home run hits, right? I don't think it's the worst companies in the market. I think it's the riskiest. They're stories, right? So
Yeah.
I get it. And there's people who want that clearly, that just shown by her success, right? So I think it's fine. But like you're saying, it's not for everybody, and it should be identified as what it is, which I think is fair to call a low quality index. Just
Yeah.
like the Russell 2000, though.
Yeah, and maybe at the end of the year, like if we do get like with those kinds of companies, typically what I notice when the market rallies is like the rally starts with a really high quality like mega caps, and then
Yeah.
as the rally keeps going, it starts to move to the mid caps, then maybe it starts to hit the small caps, then maybe it starts to move to those more like speculative companies.
Yeah.
So maybe in that scenario, then it does really well, and perhaps like it's an awesome performer. But it's not really my main focus. One company that I am looking at really closely, if we get like a small cap run or if the CPI comes out light, is RKT, which is
Yeah.
Rocket.
Love
And
it.
they do like mortgage refinances, mortgage
Yeah.
originations. So that's a company where the chart looks awesome. And if rates go lower, it's clear to see like there will probably be more home buying demand and more refis.
So Andrew, that chart looks so good. They're my mortgage provider. Most people probably know them by the old brand name Quicken Loans. But the short interest is wild in this name too. It's a heavily shorted stock coming off a really clean level, and it's really just a textbook bearish to bullish trend reversal. Really clean.
Yeah,
Is
so
this
that one
considered capital markets, Strazza?
Should be. Specialty finance probably is where it falls.
Yes, that's one I don't currently have a position there, but that is probably the top thing on my focus list because I think that one, it could be a nice winner if we get that move lower in rates, but we'll have to see. I do believe the next CPI report that comes out is probably going to be a bit light.
Yeah. You keep mentioning that. I want to show you a chart and ask you what you think about this. Throw up the utilities treasuries divergence chart. Do you think Utes and maybe some other groups are just making, calling bullshit on the bond market right now? That's what this strength is. And maybe, a weaker than expected CPI report would play into that theme, maybe clean this divergence up a little bit with bonds rallying.
Yes, that is my base case for what is going to happen here. Because I think the utilities, they can also do well. Like we got the jobs report that came out last week. It came out a little bit light.
Yeah.
And so we're starting to see like consumer staples are doing a little bit better also.
Mm-hmm.
So yeah, the TLT and the bonds, they're kind of lagging behind. And it might be like those bond investors, they need to see a good inflation report. Excuse me. They need to see a good inflation report to really get behind this trend. But yeah, I would imagine that this divergence will close soon.
By the bottom one moving up, most likely, is the scenario that you're outlining.
Yeah, that's the scenario I'm outlining, and I am long TLT, for that trade. So I'm biased, but that's what I think will happen.
So is it it's a short-term trade then?
I'm long via call options, and my call
Yeah,
options
I like that.
expire in January of 2025. So yeah, my baseline is like things will slow down a little bit. We'll get some later CPI reports, because if you look at the chart of like crude oil,
Yeah.
you'll see it started to break down in April.
Yep.
And a lot of other commodity prices as well. If you look at like the DBA, the agriculture ETF, that one started to break down as well.
Yeah.
So
What
yeah, I'm
about
just
the
starting to
strength
see
in
these.
copper? Copper remains very resilient, moving up. Like, does that point to, is there any truth to this? Dr. Copper, representative of economic growth, all that stuff. You think there's something there?
I think there's definitely something there with the Dr. Copper analogy, but I'm pretty much what I look at is like the overall basket and what that basket is doing. And I usually look at energy prices as, they have a really tight correlation with the CPI reports. So that's for the most part what I look at. But yeah, the other thing as well, guys, is in April of 2023, we had a plus 0.4% month over month CPI report.
Mm-hmm.
So what that means is for this time coming up, if we get anything less than plus 0.4%, it's going to be a year over year deceleration.
Yeah.
So we have a nice, easy hurdle to clear. So what I try to do is like, I'm looking at the charts. I'm looking at what energy prices are doing. I'm also looking at the comp that we have to go up against. And then from there, that's where I'm making the decision. Then TLT, reclaiming the 20-day simple moving average. For me, that was enough to, just take a trade in TLT and see what happens.
I like it. I was talking to the guys on the analyst team last week. But we keep on saying, though, when we flirt with the idea of getting long bonds, we keep saying there's probably better trades. And I'm starting to think maybe there aren't. Starting to think, maybe TLT, at least for a short term. A little bit of mean reversion, let it prove itself. We'll see.
Yeah, I think there's a lot of different ways to play that theme. Like small caps, if rates go down, small caps might do very well. There's the bonds themselves, utilities, which we already saw, consumer staples, which we were looking at. So like when I start to see like all these groups that would do well if rates were to head lower are like starting to emerge, to me that gets my attention. So it could always fail, but for me that's kind of like my theme moving forward for the next couple months at least.
No, I like it. I like your China theme too. I like the
Yes,
Baba.
you'll see. The China stocks they report in a couple weeks. Alibaba is sitting with about 20% cash compared to its market cap. So it's just like mind-boggling how, I don't even want to use the term undervalued, but just how cheap the companies are. If they start growing a little bit,
Yeah.
then we could see a nice move. But yeah, we'll have to see when the earnings come out.
I think the government leaving these big tech companies alone is more important than even their earnings. I think that the narrative is starting to change over there, and people are starting to think that maybe the government has learned that locking up their CEOs is not good policy, and that's causing this rally, right? Just a little change in sentiment about how they maybe treat their companies. I think China learning that the stock market's actually important is important. So we'll see. But I'm with you. They're way too cheap right now, I think.
I just wanted to point something out on the slide 2 there, Spencer. This is the performance of those ARK funds since they launched that funny video, Strazza. Remember that funny video that they did?
Oh, it was so good. Don't
It
do
was
this
so
to
good. It
them.
was hilarious. It was so hilarious.
Oh,
It was so
no.
hilarious. So what the video was, I just dropped the link, Spencer, if you want to drop the link in the chat. So
I forgot all about
Invest,
that.
they created like a satirical video making fun of value investors and, about how smart they were and how innovative they were with their investments. So since that video was launched, this is the performance of those ARK funds. As you notice, they're all at the bottom compared to the performance of more value-oriented areas like Berkshire Hathaway, the Russell 1000 Value Index, even the S&P 500, putting up record numbers, while the creators of that satirical video making fun of those types of investments have really cost investors a historic amount of money. No fund family in history has incinerated this much capital ever. Ironically, that selling started just a couple of months after the video was dropped.
I don't know if I remember that video. I'll have to watch it later.
We all remembered Strazza and I because we thought it was hilarious. It
I don't know if
still
I
is,
remember
by
that.
the way. It's more hilarious now when you look at just how bad these funds have done since then. It makes it even more funny. But it was funny from the start.
I guess, unfortunately, Kathy Wood won't be coming on the show as a guest anytime soon.
Nobody's making fun of anybody. It's just, no one's hating. We're just stating facts. It's sentiment works in both directions, right, Andrew? Isn't that?
Yeah, honestly, best wishes to them. I hope they crush it in the back half. We'll see what happens. But yeah, just when I look at it, I see similar stuff. You can see the price, you can see the trend, you can look at the companies, and you got to make your own decision from there.
Yeah.
And okay, this is fine. But to be fair, I'm just going to read this comment from the chat. There have been times when ARK has outperformed the market by a lot. It's true. And I think having these ARK funds, they're doing a service to investors. I love having them as options. I love having them as information. And there are certain market environments, like the one we had in 17, 18, 19, 20, that are so conducive to these stocks leading, outperforming. And we'll be saying very different things about these funds if we return to a place like that. So,
yeah,
there's a time and a place for everything.
Time
and a place.
That's it. All right. Andrew O'Connell, the link to his Substack is in the description, everyone, as is his Twitter. Thank you, sir. Always a pleasure.
Thanks, Andrew.
Thanks, Andrew.
Thanks for having me, guys.
Sentiment is so great. So great.
Listen, I like it. I like his Baba idea. Of
course you do. By the way, overlay a chart of Baba with FXI and samesies.
Yeah. Listen, here, throw up. Let's just stay on this quick. Throw up the 2-week rate of change. Chinese internet stocks, Chinese tech stocks, actually. And this is China. China is very similar to the United States in terms of the way their market is composed. They have heavy tech, heavy growth. All their big companies are tech companies. So we're basically looking at, this ticker is very appropriate, CQQQ. This is the Chinese equivalent to the NASDAQ 100. This is early trend momentum, right? It's turning point momentum. It's starting point momentum. We're breaking a multi-year downtrend line here. The 2-week performance that we just saw ending Friday, second best of all time. Stocks haven't been listed for too long, but the fund does go back pre-2010. So that kind of momentum on a trend break with these fresh multi-month highs, a lot of highs that we haven't seen since October, November of last year. Seeing this kind of momentum, I think, is great confirmation, very supportive of the price action. And every morning I get to my computer and I check China and they're up for the past 2 weeks. It's just a relentless bid for these stocks right now. It's exactly the momentum you want to see with a trend reversal. I don't think the trend is fully reversed yet. We need more evidence, but we're certainly heading in that direction. I think we talk a lot more about China into the back half of the year.
Warren was asked if he would consider investing more in China in addition to BYD.
He doesn't need that headache in his life.
Yeah, he said basically no.
He doesn't need that. With his size, just own the Procter and Gambles. Just collect your dividends. I going to China, I get it. He's been in build your dreams for 15 years now. This is not a new situation for Berkshire in a long time, because I bought Build Your Dreams back in 2008 because Warren Buffett was investing in it, maybe even 2007. So I think he's had it for almost 20 years. Check it.
Wow. All right. I had no idea.
Yeah. That was one of the first stocks I bought. I've told the story. Crazy stuff. BYDDFPK.
That's too many letters, but all right.
I know. I didn't know back then. I didn't know the rules.
All right, 9:33. We are open and we're looking all right. We're looking good. Is anything down today? Just Amazon and Google.
You know what you call this? Follow through. Follow through. Friday was a big day. Throw up the MACD cross chart. Actually, it's a PPO. It's the same thing. We are recapturing VWAP. I think I dropped it in up front. So these are the little tactical things. We built out the prior cycle high checklist. Should be right up front there. Yeah. Okay. MACD cross, great. A lot of false signals from daily MACD, but that's fine. Crossing higher, recapturing VWAP from the all-time highs in the S&P 500. You know, a lot of indexes, whether it's S&P high beta, mid caps, all country world index, reclaiming the prior cycle highs at the end of last week after failing and giving up those levels just a few weeks prior. Right, JC? So we don't have all the indexes back above yet, but we're moving in the right direction. We're seeing a lot more green on the screen. If you want to throw up that table, we'll keep going back to this until we're very comfortable that this corrective wave is behind us, right? But I want to see this pretty much all green. We need the sector ETFs to flip, right? So way down at the bottom of this table, those are big ones. So some follow through this week that puts XLB, XLE, XLF, XLV back above their highs from 2021, early 22 would be some really constructive stuff, right? That's what the bulls want to see this week. So one of the things I'll be looking out for. What do you think, JC, on that?
I think it comes down. I think Andrew said it. We've said it. I think it's going to come down to rates and the dollar. I mean, I hate to be that guy.
Yeah.
I know I'm always that guy. I think it's going to come down to this. I think it's a lot of. I think if these things are going to resolve higher, these are some checkbacks, things like that. I think you need and if that happens and bond market stabilizes and the dollar starts to roll over a little bit, I think that rotation into small caps is certainly possible. Look for regional banks, potentially biotechs. By the way, we should get ahead of that. Fonz, if you're out there listening, I know you are. Why don't you run a relative strength scan on biotechs and regionals, $1 billion plus anywhere in the world? Let's just get ahead of that.
So fade the sentiment, brass up. Sounds like you love losing money.
Okay.
Fade the sentiment. Who's
Talking to the chat. Talking to the chat.
But isn't that what we're doing? We're fading the sentiment. Now all of a sudden everyone's getting pessimistic after, the frothy sentiment a couple of months ago. Yeah, we're fading that. Yeah. That's right. Is that what he's saying?
Something like that.
Never mind.
Yeah.
All right.
We have the data.
Well, listen, throw back up the rates and dollar chart. I don't think we made it clear enough what the takeaway about this chart is, JC. You moved right along.
Why don't you tell me what it means to you?
These are short.
Continuing to pound the table about this.
Yeah. So these trends, we have zoomed way in here, but the point I'm trying to make, the obnoxious point, is that they've really been trending steadily higher all year. Now, these are short-term continuation patterns drawn in red in the upper right of both of these line charts. Short-term coils, short-term continuations, they should resolve higher in the direction of the underlying trend. They're resolving lower, right? So short-term patterns breaking down instead of breaking up or breaking out would be, I guess, one of the earlier bearish developments to these trends ending. Okay, got to see more, but things are headed in the right direction for risk assets. If these charts start to move down and to the right and stop moving up and to the right. Rates, I think, probably go sideways, right? Just don't want them higher. And the dollar, we'll see. We'll see. But I think this was big last week. And we had this monster rally Friday where everything was working. It was this. It wasn't the Apple earnings report. It was these two charts. Because they broke Thursday afternoon and followed through on Friday. What do you think? Is that what drove the market rally Friday? Or was it Apple's earnings? Everybody was so excited about Apple's earnings. The read through to other businesses, because Apple's just so similar to so many other companies. It must have been the read through from Apple, right? I don't think so. I think it was weaker dollar and interest rates.
Probably part of it, right? I mean, it wasn't, Apple going up is not a bad thing for the market, Strazza.
It drags indexes up, but I don't think it drags individual stocks higher with it. You know what I mean?
I think it does. I think it does. I think if Apple's doing well, there's going to be some sympathy buying there. Come on.
Apple's
not. There isn't.
Apple is not a great read on the U.S. consumer. Your phone breaks, you buy a new one.
He's talking about the consumer, bro. All we're saying is that if Apple's ripping, there are going to be some other stocks that are going to be ripping also just because of that. Come on.
I guess.
What do you mean you guess? Get out of here.
All right. If I said to you, what was the catalyst for Friday's action? This Apple reaction wasn't even really a strong beat. It was just a positive reaction.
I think it was probably a couple of things. Apple probably helped. The digestion after the Fed's, thing that they do, kind of like it's behind us, right? Those are jobs that kind of like, just like there were things that there was, the market hates uncertainty. So
Okay.
not there was more certainty, but there was less uncertainty by the time Friday came around. Is all. I think there was a lot of different things going.
Fine.
And you can't say that Apple's success wasn't one of those. Strazza, come on, man.
Yeah, you know, it's maybe a small part. It, like you said, it doesn't hurt. But I like that you mentioned FOMC.
The impact, who knows? But yes.
Sometimes we get a delayed reaction to FOMC, right? Well, we start one day on Wednesday, and then Thursday we come and we reverse it, right? And the reaction's actually different than the way it starts. I think by Friday, it was very clear that interest rates were reacting lower with the Fed meeting now behind us, and dollar was reacting lower, right? Very clear. I think it was clear by Thursday afternoon, really. But maybe the market said, okay, FOMC meeting behind us, rates and dollars lower, risk assets higher, let's go. That's what happened Friday.
Yeah.
All right, what else we got?
Did you want to look at the hot corner? Was there anything
Please.
worth talking about there?
Yeah, I would love to. And then did somebody want to mention Palantir?
They report. We have a chart of Palantir somewhere in this deck. They report earnings tonight.
We have a lot of nice reports coming up this week, no?
Yeah, not so much. Not too many today. I mean, Palantir is the big
move
one
on
today.
earnings, or is it other stuff that it's moving on?
30% last quarter, bro.
Oh yeah, I knew that. Yeah.
It moves. Listen, we have to mention we missed Friday, and guys, I'm so sorry because Friday was a big day for me. A lot of our companies that we talk about a lot on here and have covered with our All-Star Charts research over the past few years reported Coinbase absolutely murdered it. This company's margins, I talk about it all the time, how their margins explode during crypto bull markets. 1.6 billion in sales, 1.2 billion in net income. You know how tight that is?
Why is Goldman downgrading them this morning?
Because they're idiots.
Oh, tell me how you really feel.
Forget about it. So Coinbase, what did we say?
Why did Goldman Sachs downgrade Coinbase this morning, Mr. Strazza? Because they are idiots. That should go on a t-shirt.
If I listened to what Wall Street thought, if I go check my Twitter, I've tweeted about this before. Analysts have been so wrong on this company for so long. Don't listen to them. They don't get it. They don't understand it at all. If you listen to analysts, you never would have been in this stock. They've been chasing it the whole way higher, right? Totally missed it. None of them got it. Kathy Wood got it. That's who got it. So anyway, Coinbase, 1.2 billion in net income. So let's just say they do that every quarter, right? So round it up, call it 5 billion net income annually, 50 billion market cap. Sounds to me like that's a stock that trades at 10 times price to earnings. That's growing at a ridiculous pace right now.
That would make it undervalued.
We said, Spencer, now we got to see it, right? The story's there. We got to see it in the numbers. Absolutely blew it out. They're doing it. I think next quarter.
You still feel that micro strategies is a bet on Bitcoin and Coinbase is a bet on crypto? Do we still feel, is that still like the thought process here?
But I will say Coinbase, their earnings were really, really aided this quarter by the ETFs. And we talked about this when they came out. Coinbase is a monster winner from these ETFs. Go listen to their earnings call. They talked all about the spot ETFs and how that's really helping
they all
them out.
custody them, so they're just printing paper. They're like the CBOE.
They've become more of a play on Bitcoin because of these spot ETFs. It's a big business for them. So lastly, DraftKings, speaking of mega trends, incredible.
I saw this and I thought of you immediately.
Incredible. These numbers. Listen, the market, was it expecting a nice report? You know, with some monster revenue growth? Yes, but they continue to deliver. Just watch the NBA, watch the playoffs. Sean said it. The way these companies are target marketing people.
Playoffs.
The way I get notifications about how could you not put this bet on? We'll juice your odds for you. It's what they're doing is it's terrible. There will be a Capitol Hill hearing one day about it. They're going to really lock down on these NCAA prop bets, I think. But the market's just massive, and it's going to keep growing. So this mega trend just keeps on working. So these are two big stories that we've talked a lot about on this show. DraftKings, Coinbase, those stories are really materializing. Seeing them in the numbers. So those earnings report were 10 times more exciting for me than Apple.
Can you say talking your book?
Hey, who else's book am I going to talk, JC? My book's been pretty good.
I'm the one who say I say that all the time. Whose else's book are you supposed to talk? I just think it's funny because this is your book. You should be talking your book. I'm just reiterating.
I think they're both great businesses. What
All
else?
right, let's do hot corner.
Go hit it.
We got some good ones.
So hot right now.
All right. Listen, a lot of these charts, not the best today. I like Delta Airlines. So when we see purchases from executives, they tend to be buying weakness, sometimes monster weakness, right? So we're always paying extra close attention to the relative trends, not just the absolute trends. A lot of times the absolute trends don't look great once these stocks, first come onto our list. The relative trends can hint at if there's something going on there where maybe we want to watch this a little bit closer. For example, maybe the stock's getting hit, but the relative trend is holding up. Okay, there's something there. In Delta's case, it's been working on an absolute basis. Show it relative to airline stocks. This is Delta versus Jets. Talk about leadership. If you're going to own an airline stock, please own this one. I mean, SkyWest is good. Some of the smaller carriers look pretty good right now, but Delta is one of the majors. And I mean, the leadership has just been there for a while now, getting the breakout, new relative highs, new absolute highs. You're getting the insider buying. DAL, I like it. And I hate airlines.
Also, I want to point out, it was what, $500,000?
Clean level here. Yeah, but it's fine.
No, hold on. It was $500,000, right?
Yeah. Who's Willie Chang? I don't know.
He doesn't seem to have a lot of money, this guy. So you look at maybe $500,000 and you're like, Piker purchase, not a big deal. But I think based on my 20 seconds of research here, I think this qualifies as a big move for this particular gentleman.
Really?
If anybody knows Mr. Willie Chang, that would argue otherwise. But it sounds to me like this is actually a pretty big purchase.
Good.
Yep.
Good. All right, here's another one. QB, Customers Bank Corp. Do we do the markup the way so do we have the QBKRE too? Look at this. Okay. You see this little plunge, and little whipsaw back higher down here? Do you know when that was, where the arc is drawn at the lows in this chart? Can you guess? Any guesses, sir?
Where the arc is drawn under?
The lows, early 23.
Yeah,
those lows. You get a little plunge into the lows. And
yeah, that was when these banks were disappearing, right?
Not so much Silicon Valley that matters to Customers Bank Corp, but it was Signature Bank, and then Silvergate after that. So I think what an appropriately named stock this is, Customers Bank Corp. Boy, did they get a flood of new customers when the old crypto banks disappeared. This is your new crypto bank. So, do what you will with that information. We know what happened to the last two big ones, but look at the relative strength since the banking crisis of last year from QB. Ripped higher to new highs relative to regional banks, which is peer group. And now checking back a little bit, some weakness here over the past few months. This one, from a longer term trend perspective, looks really as good as any regional bank out there. Or at least it would be high up on the strength list. So I think there's something here worth paying attention to, getting some institutional buying, increasing their stake. Baypom Partners. This is a name that we hear more about if this crypto bull market continues. We hear a lot more about this one.
I don't know there was the new.
This is the same model.
Crypto bank.
Well, they don't want anybody to know, Spencer, right?
I
think they want to be a lot quieter.
Today I learned
some
something.
Friends of mine last week that worked at one of these crypto banks that no longer exists, and they were just telling me, they're like,
Ask him.
We didn't do anything wrong. We were just banking with people that they didn't want banking, and they shut us down. There was kind of making it seem like even if you're not breaking any laws, even if you're not doing anything wrong, if they want to get you, they're going to get you.
Basically, that bank knew that they were supporting businesses that the government was not approving. And the government couldn't touch the businesses that they didn't approve. So they went and they touched the banks. They said, goodbye.
Mm-hmm. Yep. And that's what some buddies of mine were telling me last week.
Spencer thinks we're conspiracy theorists when we say this. But I feel strongly that is what happened.
I mean, I know the inside story of a couple of these situations from the guys that were in there. They were telling me, I'm not going to get into details, but it's not a conspiracy theory. These guys got screwed because the government wanted to screw them.
Yes, right. That's right. They're making an example.
That's a lot of money.
The government was flexing hard.
Yeah.
Everybody's coming to them asking for money. They're saving banks. They get like big man syndrome. And they just start closing banks.
And Spencer, I'm like the opposite of a conspiracy theorist. You know me, man. I'm not that guy. It's just what it is.
Yeah. All right. Can we do recess? Because I have a lot of recess here.
All right, let's hit it.
All right. All right, I thought I would start with some pictures from the weekend. So this is the exhibitor hall. Just a huge room.
It's like a Javits Center convention, Spencer.
Yep.
I think that was pretty well how you said that. I think that was well said.
Yep. Companies who were there. Let's see. I mentioned NetJets, Clayton Homes, Duracell, Fruit of the Loom. Oh my God, the line to like just to get into like the Fruit of the Loom section to shop was obscene. See's Candy, which I admit I've never heard of See's Candy before this weekend.
Never heard of See's Candy?
Never heard of See's Candy.
The only reason anybody has ever heard of See's Candy is because Warren Buffett owns it.
Today I learned, or this weekend I learned, I should say. Pilot was there. The truck stops that Berkshire just bought from the owners of the Cleveland Browns. Did I mention Duracell? Dairy Queen obviously was there. Geico obviously was there. The plushie toy company, I forget what they're called, but they sold out of the Warren Buffett and Munger plushie toys. They were hugely popular. Who else was there? CNBC, well, which I'll show you in a second. So huge event center. Just a lot of people. CNBC was broadcasting live from there on and off, all day Friday and Saturday. So there's Santoli on TV and him showing.
What was your favorite part, Spencer?
Santoli's the man.
Yeah, he is.
What was my oh, by the way, not long before this picture was taken, I was standing about 10 feet away from Greg Abel, who is basically
he's the guy.
He's the guy. He's the number 2, right?
Yeah.
And I only noticed it because there was people that were taking pictures with him, and I wasn't totally sure what Greg Abel looked like, but he looks like Steve Ballmer a little bit.
Oh.
So I was like, is that Steve Ballmer? But I was like, no, it can't be. Then I realized who it was. It was Greg Abel, and then ended up being right. Anyway,
not the nicest compliment ever. But
so Clayton Homes, he prefab homes, man, pretty good deal.
Listen, how long is Mr. Buffett up there actually speaking for? Because for a man that age, I mean, that's a workout. Like, is he up there all day talking?
The Q&A started at 9:15 and it ran until noon. And there was a 1-hour break. And then it went from 1 to 3, and he's up there the entire time.
But then he's done.
And then he's done.
All right.
Did you see him riding around in the golf cart?
No, I assume that only happened for the early on Friday for just like the employees of his companies, but I don't really know. I didn't see him. I was looking for the golf cart though. Didn't see it.
Is that how that works? Friday is for the employees of the company, and then the rest of the population.
No. Friday, the exhibitor hall opened at noon, so I assume he was there like in the morning. I don't know though.
They don't let him around the commoners.
Yeah, no. But again, Greg Abel was just walking around. You know what I mean? Like.
All right. Question. There's always like a great video.
Oh, what was that?
Yeah,
Wait,
JC, don't worry, JC. Don't worry.
One more question before the food. We got a lot of food. We'll get there. So every year there's like a video that pops up on the internet after these conferences of some ESG activist or some oil and gas person or some like Save the Earth lunatic who like breaks in to this beautiful conference and asks a crazy dumbass question. Was there anything like that about how like Coca-Cola's killing the children?
No, no questions made it through. They do vet them all, but there was a protest happening outside the main entrance on Saturday morning. I was not at the main entrance though, so all I could hear was the echoes of the megaphone. I couldn't actually hear, but there was also a one of those like digital van, like the vans, the trucks with the digital signs on it, right? Yeah. They were driving around in a loop around the block, talking about something to do with the water. Berkshire was poisoning the water or something. I'm not quite sure, honestly.
Okay, it's the water. All right.
Yeah, the water.
It was Greta Thunberg.
I don't know. Anyway, so doing some research as far as where to eat, right? Obviously, when in Rome.
Found something pretty good.
Found an article that said the best sushi in America might be in Omaha. Whoa. So I had to go check it out. Yoshitomo is the name of the restaurant. Don't laugh.
What's on top there? Is that some sort of bone marrow butter?
Wagyu. That's Wagyu.
What's
That's
on top
Wagyu
of the
with
Wagyu?
that's Wagyu with uni butter on top.
Uni butter. Oh, they butter the
My
uni.
two-
I've never had that.
Words, Strazza, uni, and butter.
Wow. All right. Have you ever tried anything called uni butter? I've never had that.
Uni is essentially butter.
Yeah, it tastes like it.
You know what I mean?
Yeah.
Yeah.
This was
Crispy
yellowtail.
rice. Yeah.
This is yellowtail on like a house sourdough. That was all right.
And it's sourdough. It's not crispy rice.
Yeah,
Crazy.
this was all right. This was all right. The Wagyu was better.
What's this?
This is like a deviled egg with roe on top.
Is that
And
uni?
deviled
no,
egg.
there's no uni here. This is a deviled egg with roe. It was really good, actually.
Yeah, I'm into it.
I can see that.
Yeah. I think that's
Remember, there's money. Remember,
I think that's
TD
it for the food.
Ameritrade was based there, so now it's Schwab.
Wow.
There's another big company that's there, other than Berkshire, obviously.
well, there's a Federal Reserve Bank, I think, in Omaha.
The Little League, the College World Series is there. Right?
Yep, Charles Schwab Field. So anyway, the point is Yoshitomo, tremendous sushi. If you're ever in Omaha, Yoshitomo, it's in the hipster part of town. Check it out. It was fantastic and really not that expensive for like high-end sushi. I was very impressed.
Wagyu with uni butter.
Hey, rocket science. I said the same thing. Okay, I said I'm not going to eat sushi in Omaha. It's the literal middle of America. They are as far away from the ocean as you can get. I'm not doing it, and I did it, and I was very impressed.
Let me tell you something. I've had great sushi in Pittsburgh. I go to Pittsburgh. I go to the sushi joint. You know, don't knock it till you try it.
I'm telling you.
Get surprised.
Okay.
Yeah.
JC, you want to go? You want to save the best for last, or
Yeah,
what do you wanna
that's
do?
pretty much all I got.
No, listen, I love that Spencer went to the Berkshire Hathaway meeting. Like Spencer is a finance nerd. This is the Super Bowl for finance nerds. So I just love that he's just being him. He's just keeping it real. Him and his old man went. Fucking love that. So cool. I love that he said it met expectations. You know, I think back when my father and I went to Lambeau Field a few years back. This is a place he's always wanted to go to, place I've always wanted to go to. We went. It somehow exceeded expectations. I thought my experience in Lambeau Field and Green Bay and all that stuff. You know, so I appreciate that, especially Spencer with your old man. That must have been really cool. I went to the Berkshires. And I'm walking around the Berkshires, and it always makes me so happy to be there in the Berkshires, Western Massachusetts. And I'm wondering to myself, Spencer's at the Berkshire Hathaway meeting. I wonder if Berkshire Hathaway originally was from the Berkshires in Massachusetts. And as it turns out, it actually was. So as it turns out, it is I'll tell you the exact name of the company. It was like Berkshire Manufacturing. Here it is. Berkshire,
you just Googled this? How did you find
it up?
this
Yeah.
out?
So Berkshire Cotton Manufacturing Company was founded in 1889. So Berkshire Cotton Manufacturing Company. And then it would ultimately merge with the Hathaway Manufacturing Company, which was in Eastern Massachusetts. And then Uncle Warren started buying it in 1962. So the answer is yes. Berkshire Hathaway was originally the Berkshire Cotton Manufacturing Company based in the Berkshires, in the north part of the Berkshires.
That's too cool. I thought you had like stumbled upon a museum and found that out. That's
no,
funny.
I had to look it up because I was just thinking, it was just like in my head. I'm in the Berkshires, Spencer's in Omaha. Like it just
there was two things I wanted to add from it. The best question of the day was asked by like a 11-year-old boy. It was one of the first few questions actually. He got on the mic and he said, "If you could have one more day with Charlie, what would you do?" And everybody was like, "Aww," like the entire arena.
He turned and called Greg Abel Charlie at one point.
He did when he first turned to Greg the very first time. He turned.
He said, Charlie.
He turned to Greg. He called him Charlie, and then everyone was. Again, everybody went, "Aw," right? Like,
yeah, that's cool. That's so cool. You know, it's cool that you went to the first one after. Would have been cool to see Charlie, but you went to the first one without Charlie. That you're gonna remember that.
Yeah, I think that made it more unique, honestly.
Yeah.
What was his answer? What would he do?
He said, first of all, he never really answers the question. Again, 93 years old. Okay.
Dead chair. Dead chair.
But he said that he would do what they always did, which is just be with each other and enjoy each other's company. That was more or less the answer.
Read a lot. These dudes read like crazy, right?
Yeah. Let's see. I took some notes on what he said. He asked about India, said he's not sure about that. He was asked about Canada and said they are sniffing around a company, but he wouldn't say what it was, obviously. Talked about AI a little bit. Oh, yeah. And then energy. He got asked about energy because they have exposure to the wildfires because via their utility company.
Yeah.
And talked about how this kind of was, set off alarm bells in my head. But in America, we have a culture where do what you have to do to keep the power on, right? You keep the power on in this country, right? We don't have power outages like the rest of the world. He talked about how that culture may be like misguided and that maybe we should, sort of let our utility companies power down in extreme circumstances, like wildfires, for example, or heat waves. And I was like, he's talking about cutting the power. That's interesting. Okay. But I don't know. I thought that was weird. That's pretty much it. Again, good experience. More of a, not a pilgrimage, more of a bucket list item for me. I'm very glad I did it. We don't know how much longer he'll be around. So it was a lot of fun.
Listen, did either of you guys watch this Tom Brady roast last night?
I missed it. I didn't even know it was live. I thought it was
the first half of it.
Okay. So what did you think? I did too. I fell asleep.
What's her face? The blonde. What's her name?
Nikki Glazer.
Nikki Glazer.
She's always there.
I love her.
Crushed.
Always loved her. She's so funny, dude.
Yeah.
I thought I had really low expectations, JC. I thought they weren't going to go certain places. They went for it. So I'm going to probably finish watching it tonight. Nikki Glazer was hilarious. As it turns out, Gronk is a lot easier to make fun of than even Tom Brady. So that was really good. They had the crypto jokes in there.
Did Tom Brady break character at one point?
I don't know. What do you mean?
I haven't seen the whole thing.
Yeah,
me neither. I just saw a clip of him going up to Jeff Ross and saying, "Don't talk about that. Don't."
Oh yeah, but then I think they were talking about like the massage parlors.
Yeah. So did he Did he get upset for real? I don't know. I didn't watch it.
I don't think so. They kept going after Kraft, so I don't think that.
All right.
Didn't seem like it. Apparently, Ben Affleck bailed a little bit, but I haven't.
I don't know.
Belichick.
He's good, man.
Was funnier than I would have thought.
He's good on the mic. Bledsoe was there too.
Belichick was like, was it Brady? Was it me? Was it Brady? And he goes, it was both of us, but because of me.
yeah, he's funny.
I did see the Drew Bledsoe thing about. I saw the Bledsoe joke about the 26th wedding anniversary. That Brady would never experience that.
Bledsoe was funny too. I thought Bledsoe didn't see that coming. I thought he was gonna suck. He was good.
Funny. Anyway.
Funny. Yeah.
All right, it's Monday. We got the Flow Show coming up at 11:30 a.m. Eastern Time. Stay tuned for that. Thanks to
not today.
Andrew. What?
No Flow Show today.
No Flow today?
Yeah, sorry.
Oh, you're traveling
tomorrow. Yeah.
All right.
Traveling.
We'll do a Flow Show tomorrow. My bad. All right. Thanks to our guest, Andrew O'Connell. Thanks to all of you in the chat. Smash the like. Check out all of the links in the description to all of our research. We put out great stuff every single day. And we'll see you guys tomorrow.
Adios.
Peace.
I can't take no loss. I don't even know what it costs.